This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
But difficult lesson.
Yeah. Okay, here we go. What's going on, everybody? We got an awesome guest today. His name's David Blatt. He's from New York. David's a CEO of Capstack Partners. They're an advisory firm, I would guess. Advisory firm focused on helping real estate clients find debt solutions, project financing, loan sales, syndications, loan workouts, and reconstruction. All kinds of stuff. He's been around for a long time. Started this company, I believe, in 2008. So what's up, David? Thanks for being here.
Thanks for having me.
Absolutely. So you're in New York City, and it sounds like you've been there for a while on the lockdown, huh? Haven't been able to get out of there?
I have. My kitchen's my office.
Oh, man. Yeah, I know. I think a lot of people are feeling that. Luckily, most of the country, I would say, like probably the Midwest states or, not the coast. They got a little more freedom, but, California, New York, New Jersey, still some lockdown going on.
Yeah. My routine really has not changed in the last 6 months. Just like I wake up, I get out for a run as my workout because our gyms haven't been open. And then I'm pretty much working all day. But, I work nationwide, so my business is phone, email, and now Zoom. So I really haven't missed a beat, thankfully.
Yeah, that's good. I'm curious to see what happens to all the big companies out there that they've let so many, employees take off and be Zoom or work from home or, long distance. I mean, I know the company I just left, they had like 8,000 people they sent home to work remotely. Well, all of a sudden they sent out a big letter because something like 5,000 of those 8,000 people moved out of state and were like working remotely. But like the way the taxes work for the company and stuff, they're like, we can't have you living in a different state while you're working for our company. So you guys either need to come back or we need to, but nobody addressed it because they didn't think that was going to happen. So it's kind of funny anyways. So why don't you tell us a little bit about you, David, like how you got started in real estate, about your company and all that stuff. And then we'll dive into some information about, what's to come here in the near future.
Yeah. So I've been in real estate for around 20 years. I got started working for this small investment firm that was actually doing a lot of acquisitions and redevelopments of environmentally distressed assets. And I actually took a gig for them. They were going to hire a receptionist, but I really wanted to learn the business. So I was like, hey, I'll take your receptionist job. But I want to learn everything from the business and eventually leave to do it on my own. So I was there for like a couple of years, and then I just started my own investment firm. And I was really focused on buying distressed assets, so a lot of non-performing loans in commercial real estate. I was able to scale that up to a multi-$100 million fund once the recession came around in '08. We had some private equity firms that were, coming in to invest. And then the market started to get better again around 2012. So I dissolved my debt fund, and then I formed my current platform, Capstack Partners, which initially started on the advisory side, doing like debt capital markets work. So working with a lot of operators, investors, developers, needing debt capital and helping them figure out the best way to structure it and obviously where to go, just because I've been working with all of these banks for the last decade buying their paper. And then over time started to directly invest into what I've described as distressed and opportunistic type deals, like serious value add kind of opportunities. Historically have been focused over the last number of years in the Southeast and Southwest region. I just see a lot of growth opportunity there. And more recently, starting to see more of a pickup in the distressed opportunities again, which is quite dormant just because the market's been so strong. But I'm kind of excited about that just because that's my background and my space.
Sure.
And then I guess just as an extension of what I've been doing, with the advisory work, not just working with real estate investors, but actually working with lenders helping them either sell their loans or partner up on loans that they're making. Just because, again, I've been in the debt space for so long, and I have those relationships that the advisory work kind of extends to them. Like even lenders need help.
Right.
So it just gives me a great opportunity to figure out, how a lot of these groups work. And then, when it comes time to go to any one of those for, the money that you inevitably need to take down a deal, like knowing exactly who does what kind of, the source of their funds. Are they a regular bank? Are they a fund? How much money they have left in their fund? Things like that. So just having that kind of information is hugely powerful. When you're trying to secure that capital and you want to be successful without like just going out there and spraying the market with like, please, can I get a loan?
Right.
So it's been really helpful for both the deals that I find as well as groups that I work with who are buying deals, saying, okay, where do we go? How do we structure this?
So you pretty much you have clients come to you that don't know how to get the debt they need, or they can't find a bank that'll lend to them, maybe a different kind of project than local banks are lending on, and you'll kind of connect them, be the middleman, helping them find the right structure and debt for their projects.
Exactly. Yeah. And look, I would even go as far as saying, very often people default to that, like, bank down the block from them or something like that, that they know that'll do the kind of deal that they do. But,
Mm-hmm.
There could be a better source of funds, whether it means they're going to lend more dollars, they're going to provide more flexible terms, their cost might be lower. It really all is just a matter of understanding what the drivers are from a risk standpoint, as well as the kind of money that lenders have. Where, for example, if they're raising that money from investors, that means they have to deliver a return, right? So how do they do that? Spending the time to understand that really helps find a home for the deal, where I think most people are just thinking, and I get it, but they're thinking like, I just need to get money for my deal. I just need the loan,
Yeah.
So they'll go ask this bank or that lender or that lender, and they'll get different answers, and they may not understand why. And to some degree, you could argue it doesn't necessarily matter. You just got to get the dollars. But if you can understand what's driving that lender to make loans, you have a much higher rate of success, both in terms of saving time and knowing where to go, but also knowing how to package the deal in a way that'll be attractive to them, right? Speaking their language, showing them the things that they're going to want to see up front will get them far closer to a yes. So that's really where I like to spend a lot of my time in learning, understanding that, and ultimately securing money for those deals.
Yeah, for sure. So it's kind of just like a mortgage broker for most residential, single family primary home buyers. They go to their mortgage broker and they have a list of people that they work with. So you kind of do that for investors or even, commercial companies for bigger projects.
Yeah, I mean, on a basic level, it's mortgage brokering work. That is, I guess you could say, involves some more, call it sophisticated investment banking functions, in addition to just like going to get the money, which is
Sure.
the basic function, right?
Yeah. So, okay. So what have you seen like through the whole COVID thing? Because you experienced the recession in '08, you kind of went through that. Then you restarted in 2012, started a different kind of company after that. Lending practice, obviously before that '08 recession, was super easy to come by. Money was easy and cheap. It got harder. Now it's getting easier and cheaper again. What have you seen since COVID, and what do you think is going to happen going forward?
I would say that, I mean, the last recession, the capital markets just straight up seized up.
Mm-hmm.
Like nobody wanted to touch real estate. No one wanted to finance deals. I mean, it was just, like a drought, and, it just like stopped. This time around, I think, the government and the Fed, it was like they went through this kind of a crisis before because of the last recession. And so, you saw a lot of like, money get injected into like the economy, and all these programs started to get presented, and a lot of like forbearances and stuff like that were kicking in just to keep the capital markets going. I think really kept everything moving along economically, even if, we were call it quarantining, on a physical sense, right? Like deals, people were open for business from a real estate investment and financing standpoint. I think that remains the case. What I'm seeing now is that lenders are maybe offering less than they might have been pre-lockdown. So their LTVs have dropped on the deals that they're financing, and I haven't really seen the actual, call it, interest rates climb, because there's argument to say that it's maybe gotten riskier out there. I think lenders are also just being pickier about the kind of deals that they're doing, right? But the loans that they were providing are the loans that they've been doing. I think that on a go forward, that's probably going to continue, and I think it'll start to. The pace seems to be that lenders are getting more comfortable with the market again as it normalizes and reopens and stabilizes. There are certain things they're not going to want to touch still. So like, strip malls are really difficult, and hotels are still like, a straight up no. Multifamily and single family rental has just been super strong. I don't think it missed a beat. And I think that office right now, people are like just looking closely at. I'm actually excited about office in general, because I know there's this whole work from home, kind of like the world's changed and no one's going back to the office. But I just, you're seeing more and more that companies are reopening. I think the big banks just said to people, like, you got to come back to the office. I've spoken to people who have gone back to the office, and, it's still like, whatever it is, 25% capacity, or, whatever that number is.
Yeah.
But a lot of people are happy to be back there, just to have a place to go. So I think there'll be like a reforming as to how people work, and I can't really tell, but from an investment standpoint, I think, you're seeing this trend back towards normalization in terms of dollars and things like that. I also think there's going to be a higher default rate as we near year end into first quarter, because I think a lot of deals got, everything went into sort of like an induced coma. You know what I mean? Like, it was like banks gave forbearances across the board. There was like a timeout called at lockdown, and everybody had some like runway to just, get their house in order. And I think as time goes on and as we approach the end of the year, a lot of lenders are going to sit there and say, okay, these guys are just not coming back, and so we got to cut losses here and sell our stuff. And so I think that, we'll probably start to see that happen towards year end into next year. And a lot of places where they have moratoriums, those get burned off. So, we'll probably see a spike there. But I think that there's a lot of opportunistic buyers out there right now that are just waiting for this anyway. So once that comes online, you're just going to see that all that deal like flow just gets scooped up. I'm hoping to be one of those.
Yeah, me too.
Yeah, exactly. So I think, right now the capital availability right now is still so high, meaning there's so much money out in the marketplace right now that is really searching for deals. And I think that's a huge distinction between where we are, this crisis versus the recession, a decade ago, where, as I said, like, just money evaporated. Either nobody had it, or nobody wanted to put it out into real estate. And I think that's really what impacted a lot of the values. Here, we're just like, everyone's just like hanging around the rim, like waiting for like the deals to come, at a price that's favorable, and like they're going to snatch it up.
Yeah, I think the only really bad thing, with this whole COVID thing, as far as the real estate market, is just the fact that, tenants might not be able to pay the rent. Therefore, landlords can't pay their mortgage. But the thing is, the government keeps stepping in and giving all this like relief, you know what I mean? Like the stimulus checks, which is fine as long as they're paying that on rent, but then they get forbearances. So I wonder, with the extension recently, right, of eviction being, it didn't get extended through the end of the year. I'm sure they're not just going to all of a sudden let 30 million people just say, well, this is the date, you guys can't continue on, you know what I mean? All of a sudden there's going to be all these evictions, because that would just like spiral the economy into '08. So I would imagine that they'd probably like keep extending it. So then I don't know where the end's going to be. But I feel like that's the only real bad thing about this economy for real estate. Whereas before it was like the actual loans were bad loans and all this stuff, the debt crisis, people were getting loans they couldn't really afford. This time the government's stepping in more. Don't you think?
So I think the government intervention is well-intentioned, right?
Yeah.
That's the point, right? You don't want to kick a, few, whatever it is, 100 million people out into the street.
No, definitely. Yeah.
So I think, a lot of it is really tied to that, but it also strikes me as a way for the government to try to keep things on hold as much as possible to let the economy continue to heal from the impact of the crisis, which is so sharp, right? And in terms of like, as things reopen, we are seeing, for example, right, the drop in unemployment, people getting back to work, more jobs being filled and things like that, right? So there's this underlying hope that, okay, at some point, this catches up to people's ability to actually support themselves again. Listen, I'm on the real estate side of this trade. So, the idea that, you own an asset which has now flipped and become a government mandated liability, in that you're not seeing the cash flow, and yet you don't necessarily get relief from having to pay your bills, whether they be property taxes, utilities, insurance, and your mortgage, right? Unless it happens to fall into the agency, like, Fannie Freddie mortgages, right? They have some like, ability to do that, but otherwise the government can't control private lenders' desire to, collect the mortgage that you owe it as a real estate owner. So I think that is something that needs to be addressed. And, you have seen, I track that, and, there are landlords who are trying to essentially lobby the government to say, hey, rather than cutting off one part of this ecosystem and passing the stress up the chain without providing relief to that link, maybe there's a way to facilitate payments, or, creating something to just keep that whole thing flowing the way that it needs to. So, I mean, I think, look, a lot of this is also a discovery process for everybody. We've never dealt with this before. We don't necessarily know what's going to work on such a huge level. And, a lot of this is probably just like, again, that timeout sentiment while, we're trying to figure it all out. And some things are going to work and some things are going to fail miserably. And, if you don't have a stake in deciding what that is, it's really easy to say, well, that was just, a terrible idea or whatever it is.
Yeah.
But I will say, I mean, I do think that there's been a certain resilience and responsiveness to a lot of what's been put out programmatically, where things have been tried, but like if they're not working, or if it's, working but not enough, then it scales. But at the end of the day, I've been a big believer in, the balance of saving lives and saving livelihoods, right? And I think, as we continue to move forward to, get people back to normal, and be able to support themselves. I don't believe, this whole premise of like, people wanting to not work and to not have to pay rent. No one wants to be a deadbeat. People want to feel productive and self-sufficient, right? I mean, I believe that. So, to give people those opportunities, to me, is really the true path forward, and everything else is just sort of like a Band-Aid until we can get to a place that allows them to do that.
Yeah, and that's kind of what I was getting at. Is I think a lot of people are anticipating it to be such a big event. Like there's going to be tons and millions of foreclosures, but I don't. Which on one hand would be sad. Obviously it'd be terrible for the people, but on the other hand, there's a bunch of people that would try to benefit from it. But I can't really see that happening. I feel like it's going to be, they know what, especially now there's so much communication going on. Everybody is talking about it and everybody's knowing we're in '08. It wasn't like you could jump on a 10 podcasts and see what everybody's thinking at the same time. Nobody was talking about it. It was very hard to find out the information, where now it's like so free flowing that I feel like they will temper that foreclosure if it's going to happen, to where I don't think it's going to be a huge dip. Personally, I think it's just going to continue to go up, and everybody's going to keep waiting for another year and another year, and all of a sudden it's going to be back in this upswing that we're going to continue to do. I mean, I don't know. It just seems strange to me. I don't know.
I mean, I think you're touching on a good point. There's first of all, so I already talked about capital availability, right? Which is like just like a fancy way of saying there's a lot of people with a lot of money that want good deals, which means that it's going to be hard to come by because you have more competition, right? And I think informational availability is also different now than it was, say, 10 years ago, right? So the idea of spotting trends and recognizing opportunities or hearing about those things and understanding how to execute on those kinds of deals, particularly when you're talking about distressed, is certainly more challenging because of the fact that, like you said, you could hear it, you could learn it, whether it's a podcast, a LinkedIn post, or, you're just seeing announcements of funds and things like that, So, I mean, I think you're right on a very macro level, but like at the end of the day, we're deal by deal, right? So you just need one at a time to some extent. Unless you're a fund, then you just need like a high volume of this stuff. But and I don't envy those guys. There's just a lot of money that's been raised for certain strategies, and I think it's reflective of, again, how much money is interested in real estate and the different strategies that are available and the different assets you can buy. But in terms of finding the value in a high volume, it's hugely challenging. So, there are people I know that, all of a sudden they announce that they've got like, a few hundred million raised or even billions raised to go and do this. And, at first it's like, wow, that's a lot of money. It's nice to have that kind of war chest. And then my second follow-up to that is, wow, that's a lot of money to have to go and put out into that space. Where the hell are they going to find all that product at the price that makes sense? So either they're not going to put the money out, which is going to end up dragging their fund performance, because they're measured against the entire fund, not just on one good deal. Either that or they're going to overpay, and there's always problems on the back end there. So I don't know what the right answer is there. I just know that I don't have to deal with that, and there's less stress in my life.
Yeah. Where do you see people moving to right now? Like, is there certain markets or areas or types of real estate that a lot of the bigger investors are moving into? Obviously, multifamily has been key, but like what geographic areas? You mentioned the Southwest, right? Or Southeast?
Yeah, I think the Southeast has just seen a strong in-migration, in the Southwest as well. And that's a broad region that I'm describing, but you have markets, in there that continue to support, economic growth, so you look at like, places like in the Carolinas, which have been strong leading into, what's been going on and, continue to be so. And I think a lot of those markets, even, South Florida, Nashville, like parts of Texas, like all the major markets, like in those areas, the list goes on. But what's interesting about it now is that, a lot of these markets have had growth because they've had, let's say, a growing downtown, or a central business district that's been driving, is kind of been the focal point of a lot of these cities. And I think that why they're getting attention now is because the outer ring suburbs of these places are actually becoming interesting to buyers because of everything that's been going on, and suddenly there's like need for space, where people want the houses instead of the apartments, or the condos at the moment, and so suddenly the suburbs don't look so bad. And especially if you don't necessarily have to commute in at least every day to an office building that's downtown, it's also suddenly not that bad to be out in the suburbs and, have that kind of space and, having that lifestyle, whereas before, there was definitely a trend going in the opposite direction. And so there's a lot, I'm seeing both, people moving towards that, and I see investment focus really on that end because of A, the trend, and B, I think you're also getting better value than you would, call it a downtown apartment building versus a garden apartment complex in the same market, but maybe that's like, an hour out or something like that. So that to me is also, I think that's an interesting opportunity. And then layer in all the, single family rental that, has just become, just a very attractive asset for the same reason.
Yeah, I think the new construction in a lot of places, if it hasn't been booming already, it's going to continue to pick up. I know where I'm at here in around Boise, it's been on fire and building tens of thousands of houses for 10 years now. And I would imagine that it would start to slow down, but really in these Midwest places, or central part of the United States, it's just like, I think it's just going to continue to grow because people from the cities and these big on the coast, they're wanting to get away from all that. And like you said, they're not wanting to go into the downtowns maybe as much. So that area will probably get hurt more and expand out into the suburbs. So I agree with that. 2020, the whole craziness of the economy right now, I think it often leads to, entrepreneurship and businesses being built, great businesses. What do you think about that with how 2020 could be a positive year for entrepreneurship or investments in the future?
I am really bullish on 2020 from that
Yeah.
standpoint.
Uh-huh.
And I have been, and not, so let's just qualify this, right? I mean, we are obviously dealing with, the fallout of a pandemic, but, you think about it, crisis is where the most successful businesses and platforms are born. And so I really see this as like, if you have started something or can start something that weathers this situation and ideally maybe even adapts or addresses it in some way, I think it's a huge opportunity right now. So I mean, we're talking about this concept of like, let's say like the trend into the suburbs, if like that is now going to suddenly be your focal point, here you are, you've got some runway. If you're able to go out and raise money into opportunities in this kind of a market environment, and really just overcome a lot of, the instability, right, and the uncertain times in which we live, which we've heard numerous times over. I think that all of that really just sets the foundation, for massive growth and success. And I from that standpoint, it was just a pivotal moment when this whole thing was starting to like come down, and like, quarantine was like now just like a regular word, not just like some weird, concept that,
Yeah.
I've seen on TV, right? And so I was like, oh, okay. And I had a moment where I was just, for a second, I was just like, I distinctly recall deciding, I was like, all right, I can either stress, freak out, and cave, or I can figure out what exactly I can do to create value for myself and the people that invest with me, into the opportunities that I like and that I find, and to really take a step back and think of what my investment thesis is under these circumstances, that could have long-term sustainability, because it will be different, and so I mean, from that standpoint, I've been ever since that self-talk, I've just been stoked about getting out there and, just I've been working on deals. I've been finding opportunities. I've been connecting with people. I find it easier to do because of, Zoom lifestyle and things like that.
Mm-hmm.
I've been so much more efficient. These virtual conferences that replace the real ones. I know a lot of people like to get in front of each other, and we'll certainly come back to that someday. But like, I don't lose 3 days to go somewhere, and hope I can work a room and make some contacts and make a deal happen. It all happens, at my computer, and then I can get back to work or do it at the same time. I'm not missing a beat. So I just feel like there's so many efficiencies that have come out of this, and it really favors, that lean startup entrepreneur mindset,
Mm-hmm.
which is very exciting for me.
Yeah. So what are some tips before we move to the last part? What are some tips for people to really connect with more people in the industry, or whether it's, somebody like yourself or banks out there, or trying to find deals? Like, how do they do that? If they're kind of sitting at home, kind of lost.
Uh, well, I guess, stop being lost
Yeah.
is step one. You really have to define what it is that you're trying to accomplish, and really map it out and put a timeline together for that,
Mm-hmm.
which I know is basic guidance, but, a lot of people, like you said, if you don't have at least that, like, how do you know where you're going, right? And then you can kind of backfill the rest of that stuff in terms of the steps. So, let's say you do figure out, okay, within the next year, I want to take down X deals, or I'm looking to buy my, first this, or whatever it is. I want to expand my portfolio. I want to switch into different asset classes, or a different region of the country, or, whatever it is. You're at your computer, research, figure out if that makes sense. You want to prove it out.
Oh, might have lost you there. Hello. I get you. I lose you.
Talking about the things that you may be interested in.
Oh, yeah, we lost you for a minute there. You kind of, your voice and your video cut
Sorry.
out. But that's okay. But yeah, you're just saying, kind of have a plan. You're at your computer, just look for what you're going to do next. Look at your opportunities. See where you want to go. Have a plan in place, and then start reaching out to people. Right? Is that what you're saying?
Yeah. Figure out, who's talking about the stuff that you're interested in, who's writing about that.
Mm-hmm.
Listen to podcasts, all of that. And then, people are pretty accessible. I mean, I listen to a lot of podcasts, and, I like to, when I hear somebody I like, if they say something super smart, I usually immediately just, drop a LinkedIn connection and just say, hey, I really, appreciated what you had to say on this topic, and I strike up relationships with people that way, and talk about business things, and sometimes deals happen, and everything's at your fingertips right now. It's, to me,
Yeah.
it's really easy to connect and to learn and to understand.
Yeah, LinkedIn has proven to be quite more impressive than I anticipated. I just got on LinkedIn, but it seems to be so much easier to connect with people on that. And like you said, people are much more accessible than you would think they would be. So LinkedIn, if people are out there and they're not on LinkedIn or getting in that space, it's more of a connection for business people, or entrepreneurial type people. I found that you can connect easy. So
I think so. Yeah, and it's just one of those things that, the distinction between that and, let's say, like, a Facebook, is that, you want to be really focused about who you're connecting with.
Mhm.
Really think about, okay, can I add value to this connection, or can I derive some value? Right? It's your networking, really, in a virtual sense. I think that there's a sense, to some degree, of people just like having the connections, because they're just bringing over that mentality of, call it the Facebook mentality. I have this many friends.
Yeah.
To me, there's only so much time in the day, right? So, you want to try to make it count, and really make your interactions count. And like you said, the one thing in real estate is that people are looking for opportunities in the form of deals and the capital to invest in those deals. And so, I've found that, no one's really kind of above it all, so to speak, in terms of, if you're able to deliver one of those two things to someone with whom you're trying to, either transact or cultivate your network and, just get something from them, then they are available to you, or they would be, because you never know where your next deal is going to come from or your next opportunity is going to come from. And I think that philosophy really guides particularly people that are entrepreneurial, and particularly people that are entrepreneurial in real estate.
Mm-hmm. Yeah, for sure. Okay, so where could people find out more about you, David, your company, and like how exactly could you help maybe the smaller investor, like buying like smaller multifamily or something like that?
So I guess after that whole download on LinkedIn, obviously I'm active there.
Yeah.
Uh, so that's where I could be found. I'm pretty active on my socials. Our website, Capstack Partners, has some information. It's capstackpartners.com. And in terms of information on, I'm pretty active posting stuff. I like to, at the end of the day, I'm a real estate entrepreneur myself. And the difference between small deals and big deals are just zeros to a large extent. But at a basic level, they really operate the same way. And so those fundamentals don't change. Just depends on what you have capacity to go after, and, what you have, just the boldness to go after.
Yeah, for sure. Okay, well, cool. Yeah, that's some good information, especially about, the 2020 economy and beyond and things like that. So I appreciate you coming on here. Hopefully people reach out to you. Everybody get on LinkedIn. That's like your takeaway today. Mainly get on LinkedIn and reach out to David Blatt, because he's obviously got some good information. So thanks again, David, and you have a good afternoon.
Thanks so much.